Hi, I'm Edwin, and every weekday before the market opens, we'll try to answer three simple questions. That's what happened, why it happened, and why should Indian investors care. This is not a stock tip channel. We don't tell you what to buy or sell. We just want you to be. We give you what happened and let you know what happened, and want you to be better informed investors. So today's market isn't being driven by fear. That's the main. It's being driven by falling oil prices, expectations of a stable U.S. Interest rates, and the beginning of India's earnings season. Over the next few weeks, quarterly business updates may become more important than geopolitical headlines. That's a big shift that we'll have to understand, the Indian investor has to understand. Indian markets are expected to open on a cautious note as GIFT Nifty is indicating largely flat to slightly subdued opening after Nifty gained about 0.9% last week. Markets have rallied for the last 4 consecutive weeks, so some consolidation would not be unusual. And oil prices are falling again. OPEC has decided to increase production in August, adding more supply to the global market. So crude oil and Brent crude has slipped toward a 4-month low. Why this is important? Because India imports a lot of oil, so lower prices could benefit the overall industry. US interest rate story continues to improve. Recent US economic data has reduced expectations of an immediate Federal Reserve rate hike. Why this matters is a lower interest rate generally supports an emerging market by making risk assets relatively more attractive. The earnings season begins this week. So we can say that from a macro perspective, it is going to shift to a stock based, or how good a company or the projections or the management or how good the future of a company looks. The focus is going to shift towards that. Private banks have released encouraging business updates. Early quarterly updates show healthy loan and deposit growth at several large private banks, especially HDFC and other banks. Although performance varies across institutions, investors will now look for confirmation when detailed earnings are released. Okay, that's something that everyone has their eye on. Monsoon remains an unappreciated story. Rainfall in June was significantly below the long period average, making monsoon progress an important theme for investors watching rural demand, agriculture, FMCG, and tractor companies. Rupee is becoming a story again. After weakening last week, the rupee is expected to track foreign portfolio flows, exporter activity, and movement in the US dollar. Strong foreign bond inflows have helped support sentiment, but currency traders are watching upcoming global data closely. So we don't have a proper picture or proper idea where it's going, but we are hopeful. Um Global markets, Asian markets are trading with modest gains after Wall Street futures pointed to optimism around the upcoming earnings season. Technology shares remain in focus because of the strong AI related demand to support semiconductor companies. Samsung's upcoming results are one example that the market is watching closely. And another important development is the crude oil has continued to soften despite the lack of a full breakthrough in between the US and Iran talks. Shipping through the Strait of Hormuz has continued normally, reducing immediate fears of supply disruptions. For Indian investors, this combination of lower oil prices and easing interest rate concerns is broadly supportive, but the sustainability of the trend will depend on the upcoming economic data and corporate earnings. So 1 month ago, the market was worried about oil, inflation, Fed rate hikes, Middle East tensions. But today, oil is lower, inflation concerns have eased, the Fed rates are not expected to rise, and the market's attention is shifting from macroeconomics to earnings. This is a healthy transition because over the long term, stock prices follow business performance more than headlines. So everybody should or will be excited for what is to come. Investors should be wary of any fresh developments in the Middle East, speeches from the Fed officials, and this week's Fed meeting minutes, which could influence global market sentiment. Today's market appears to be constructive but selective. This is no longer a market where every stock moves together. Instead, investors are rewarding companies with a strong business momentum while becoming more selective elsewhere. Main focus would ideally be on banking stocks after business updates, IT to see whether last week's recovery continues, consumer companies as the market tracks monsoon, and stocks reacting to fresh corporate announcements after rather than broad index movements. Remember that a flat opening doesn't mean a dull day. One of the biggest opportunities comes from stock specific news during earning season. And if you've liked what we have presented, do like, share, and subscribe. And join us for most post and pre market updates. Thank you.